This video is to help with problem 2B-5, which are the T accounts flowing to financial statements. When we learn about debits and credits, the first thing we learn about, of course, is our accounting equation. Then we take it to our T accounts. Then we will eventually take it to our journal and our ledger. But the best way for you to learn is your debits and credits with T accounts. So this problem is going to walk you through transactions that you are seeing as similarly in problem 2B-5. The most important thing here is that you have to remember that this is the debit side and this is the credit side. You also have to remember your basic rules, what increases and what decreases. So my assets, withdrawals, expenses all increase on the debit side and decrease on the credit side. Okay. So my revenue and capital will increase on the credit side and decrease on the debit side. Okay. So you have to keep those rules in mind when you're doing these T accounts. So our first transaction was letter A. The owner invested $30,000. So I have my owner investment of $30,000 of cash, increasing my cash, so it's going to be on the debit side. It will also increase my capital by $30,000 because I'm going from zero capital to $30,000, and it is letter A. So my first transaction is done. Letter B. We purchase a delivery truck on account. So what is happening here? What's happening is we know that we're purchasing a delivery truck and we're going to pay our vendor in the future. What accounts are involved? Our accounts that are involved are our delivery truck and our accounts payable. My delivery truck is an asset, so again, it is going to increase on the debit side, and it was for $14,000. I'm going to pay my vendor in the future, so it is going to be on the credit side for $14,000. As you can see, that each time I do a transaction, I have a debit and I have a credit. My transaction must always be in balance. For every debit, I must have a corresponding credit. So letter C, we purchased office equipment with cash. What is happening? Again, I'm purchasing office equipment with cash. Office equipment is an asset, increasing on the debit side. So for letter C, I am going to increase my office equipment by $1,500. I'm going to decrease my cash by $1,500. That goes on the credit side based on my rules over here. I'm going to decrease on the credit side. Transaction D, we had advertising expense with cash for $500. So I know that I'm paying an expense. I've received my bill for advertising. I wrote a check. So therefore, I am going to incur my expense based on my rules. I know that it increases on the debit side. So I'm going to put my $500 in. I paid with cash, so it is going to decrease my cash. Letter E, we provided services for cash for $2,400. So my delivery fees earned is a normal credit balance. I performed my services. I have fulfilled my end of the bargain, so I am going to recognize my revenue on the credit side. That's its normal balance for letter E. I am increasing my cash because they paid me right then and there. They're not going to pay me in the future. So I delivered my product, they paid me. So my cash increases and my revenue increases, again, based on these rules. We paid $900 in salaries. Again, I wrote a check. I'm paying my employees. I'm incurring an expense. So for letter F, I'm going to increase my salaries expense by $900, and I'm reducing my cash by $900. We put the letters too so that we can follow our transactions through, or you can use the date. Typically it's either or. Okay? So letter G, we paid $1,100 in gas expense. Again, we incurred an expense and we paid for it. So we're going to increase our gas, this is letter G, by $1,100 because we're incurring that expense. I paid it out, so I am going to decrease my cash because I now have $1,100 less in my cash account. Okay, if I can actually do that correctly there. Okay. Letter H, we provided services for $900, but my client asked me if they could pay me in the future. And we do that to encourage people to use us. We're still going to recognize the revenue because it doesn't matter when we actually receive the cash, we have fulfilled our end of the bargain. So I'm going to credit my delivery earned because I earned it, and I'm going to debit my accounts receivable because they're going to pay me at some point in the future and it's an asset. Letter I, telephone expense for $100. We're paying it out. Okay, letter I. Again, same reasoning. I'm going to increase my expense by $100 for letter I. Letter J, we received from client $600. So this service that we did for $900, they're paying us a partial. So letter J, for $600, I'm increasing my cash because they paid me. Now they owe me less. So based on my rules, my asset's going to decrease on the credit side for $600. Letter K, the owner withdrew $250. So I'm going to put $250 on the credit side for this because they're taking money out. My withdraw is a normal debit balance based on my rules. Okay. So now all of my transactions are posted here. So we need to then foot these and do our trial balance. So I'm just going to single line these and put my balance. I'm going to have to insert a line here, or insert a row. Okay. So my debits add up to $33,000. My credits add up to $4,250. I'm going to subtract my total credits from my total debits, and I have a balance of $28,750 on the debit side. So we would run through all of these and calculate my balance. Okay, so here my accounts receivable. I have a $300 balance that my client still owes me. I have to add up my delivery fees for a total of $3,300. Okay, so now all my T accounts have all my transactions entered and they're balanced. Okay, so I will do another video for the trial balance and the financial statement.